Hey, what's happening, guys? Dan Dario here with another Options in Play video update. Uh, just first off, want to say thanks to those of you that stuck around yesterday for our option session. So we talked about a lot of different things. Talked about quantitative tightening. We talked about the setup this week for the CPI, setup next week for the FOMC rate decision, and just I always value the time we get together, and I mean, if you weren't able to make it, definitely check it out. The recording of that is up on the website. So if you have any questions, feel free to shoot me a message. Okay. Um, I I I try to do a video every so often, just talking about day trading options, because it is something like I really like to do during the day. I like to trade options on like breaking news headlines. Um, and really what it comes down to, like this type of trading, intradays, it's all about speed. So I oftentimes buy options first and then ask questions later, meaning that what I try to do is get in as quickly as possible, because what I like to do is buy options and then try to sell some immediately into like the volume surge, and then once get a better feel for the news and what its potential impact is, then decide whether I want to keep holding or just take the trade. Okay. So really, again, it's just all about speed. It's having like kind of an idea of how much size you want to buy, right? And I always use limit orders. Like, I don't use market orders. So I try to find the option strikes that the bid ask spread hasn't blown totally wide out, because sometimes when there's breaking news, the bid and the ask really widen, so you end up having like this super wide spread on what really shouldn't be expensive options, right? So if the options are, maybe the midpoint is 50 cents, you might see the bid at 20 and the offer all the way up at like 90, right? So yeah, maybe the options are trading for 50, but with the bid at 20 and the offer at 90, if you paid the offer, that could be kind of like a costly error, right? So I'm trying to focus on contracts that have a relatively tight bid ask spread, and buy first, and then into like the initial volume surge, when all the money starts to come in on the contracts, try to take a little off, reduce risk a little bit, and then maybe give myself a little flexibility to see if I can stick with the trade and then hold, right? So try to throw out some orders maybe at like a 50% gain mark, throw out some orders at 100% gain mark, right? So just kind of keep reducing risk, reducing risk, reducing risk. And then after that initial surge, so this is CCJ, you can see like the news came out, right? And you had the initial surge, right? You can hopefully sell off some options into that, and then you can hold and see if it continues. In this case, it was obviously like a pretty positive headline, and it continued to build after the initial pop. So then you can kind of like piecemeal out after that, right? On the opposite end, Twitter had what seemed to be like a negative headline. So this is what this bar was. Okay, so um, there was a headline that Elon, the financing is falling apart, right? And the stock initially dropped. So when I was looking at puts on the downside, right, it didn't really get that initial move. It didn't have like the big it was just kind of like a flashy move, but then basically, I mean, it was back into like the 39.70 area immediately. So when I was looking to open puts, and when I got into them, it really just never had the push for me to like sell off and lock in some gains or reduce risk. So my rule of thumb is, when a stock comes back to where it was when the news was announced. So in this case, Twitter was trading at like 39.90 when the news first came out, and it dropped, right? So when Twitter got back above 39.90, then that's my cue that the news really isn't impactful and I want to get out. So like, that's my rule of thumb when it comes to these newsy things. If the stock comes all the way back to where it was before the news announcement, then that's my cue to exit. Okay, so in addition to using like technical stops, right? So say like I bought the options for 50 cents, and they, all of a sudden they get hit and they're now trading for 25 to 30. I might just look to exit, because I've lost about 40 50% of the premium. Alternatively, if the stock comes back to where it was, so in this case Twitter, the options didn't really get hit hard, but the stock came back to where it was pre news announcement, then that's also a cue for me to get out of those weekly contracts that I bought for the news play. Okay, so that's kind of how I approach like these newsy intraday moves. But again, it's for me it's all about speed and like having a game plan, right? So knowing that into that initial surge of volume, I want to have some orders out to hopefully reduce some risk, and then if possible, that'll give me the flexibility to stick with it a little bit longer and see if like the news is really impactful and you get like the secondary or like third push on top of that, when it really starts to gain momentum and it starts to get more attention from people and it gets picked up by like the news networks. Okay. um, so anyway, it should be a busy conclusion to the week with the CPI on Friday. Hopefully we get out of this really tight trading range we've seen on the indices sooner than later, but we'll see. We will see. So if you like this video and you're looking for more information about day trading options, please follow up with the link in the description of the video for more information on options to play. Have a great night. Stay well, and I will talk to you all tomorrow.